Okay. Assalamualaikum. Hello, good afternoon, everyone. It's already 12 o'clock. How are you?
Good.
Doing good.
Okay.
Afternoon. Happy New Year to you.
Happy New Year. Okay, yeah, it's still in January, so Happy New Year to you too.
Thank you.
So wait, sorry, I need to still admit students. So, okay, hello Zyeera. Zyeera, we have Zyeera here. Hi Zyeera.
Hi. Hi.
Hi Adina. Hi Afika. Hi Aisha. Aisha, yeah, I know Aisha very well. Zyeera, Aisha, Alia. Hi Alia.
Hi.
Hi Afika.
Hi.
Hello Amira. Amira Rosli. We have two Amiras here. Another one is Amira.
Hi, sir.
Anis Qistina. Hi Anis. Hi Ali. Sorry. So your name is moving. Wait, sorry. Here. Hi Anis. Hi Atika. Hi Auni. Hello Daniel. Daniel's name. This is a very familiar name. Danial Haqeem. Adina Hiriza Harinada. Who else? Lutfil. Oh, dia ada ni. Hai. Ada Izzati. Hi Izzati. Hi Farahin. Hello Nisa.
Hi, sir.
Hi Shafika. Hi Qistina. Hello Zyeera. Zyeera or Zyeera. Zyeera I mentioned already. Okay. Amira Qistina. This is the third Amira we have today. Hi Amira Qistina. Okay. All right. So first thing first. Two things, right? Number one is I would like you to prepare your notes or your materials, whatever that you do to copy down whatever that is important. Okay. And because for me, this is not just about learning. Okay. It's also about learning at home. So if you don't copy down things, you screenshot or you just take photos and so on, I don't think it works. All right. Okay, so because at the end of the day, whatever you take, all the photos that you take, you don't even look at it back. So that's why it's very important for you to jot down the notes during the class. Right? If you want to open your camera, just make sure that you are okay with it, because sometimes due to privacy issues and so on, you don't realize that the camera is switched on. Things happen behind the camera, so that's why if you want to open your camera, just be careful with that. Number two, about the camera also. At the end of the class, or maybe in the middle of the class, I need everybody to open up the camera, to switch on the camera, because we need to take our class photo. Okay? All right. So today, I think for the first few minutes, I'm going to stop a bit because I need to grant access to students because we only have 22 right now. We should be having another 10. Okay? So people are still coming in, but doesn't matter. Let's just start first. Okay, IFRS 15 revenue. Why I choose this topic is not because I'm good at this topic. Okay, the topic is chosen because it is quite new compared to IAS 18. You see in my previous class, actually IFRS 15 has been here for like two years. I think in 2018, 19, and 23 years. Okay, but the thing is, there are candidates in my class who actually started their ACCA after diploma. So in their diploma studies, they still learn IAS 18. So that's why, that is number one, why I choose IFRS 15. Number two, because it is one of the areas that students are still confused, and there are so many things to learn from this standard. Okay? All right, so IFRS 15, okay, IFRS 15 is about revenue recognition. So please remember, this is about revenue recognition. The first line item in our P&L, sorry, profit or loss. Okay, and Sharafi, hello Sharafi. Okay, you still remember me, Sharafi? Afi ingat saya lagi? Okay. All right, so this is revenue recognition. Okay, the first line item. You want to see, because you must remember in your P&L, because I say it's the first line item in your P&L. So for revenue in P&L, you please remember it is only from January to December if your year end is 31st of December. So this is the problem about revenue recognition, because it is a P&L item. All right. So being a P&L item, it has to be recognized just within 12 months. Or in accounting terms, we call it 12 period. 12 period is 12 months. All right. So whatever that happened before the first period and whatever happened after the 12th period, it shouldn't be here. Okay. So this is the problem about revenue, because you cannot simply recognize everything that you receive. Okay, so the first problem that we need to tackle today is time. Okay, so you need to make sure the revenue that you take is just within the time allowed for you to take. Okay, so that is number one. Timing, the timing is a problem. When you receive and when you, number two, earn the revenue. You must remember, revenue is based on what we earn. Okay, have you earned the revenue? It's not based on what you receive, it's based on what you earn. All right, so how do you know if you have earned the revenue? So this is the popular term for revenue, which we call as performance obligation. Whether you receive the money or not is not important. The importance about revenue recognition in the new standard IFRS 15 is whether you earn the revenue or not. That is why we call our profit as earnings. Okay, why we call it earnings? Because those are the numbers that you already earn. If you have not earned but you have received, that is not revenue. It shouldn't be part of our earnings. Okay, so when we say about earn, we talk about the performance obligation. If you have performed your obligation, that means you have most probably earned the revenue. So timing is a problem, earning is also a problem. Third, number three, when we say about earning, you have to remember the nature of the revenue. The nature of the revenue. Is it really a revenue? Okay, is it really a revenue? That is something very important for all of us to know here. Okay, okay, sir, if it's not a revenue, what can it be? Okay, listen to me, right? When you receive money, you debit bank or you debit cash. All right, so this is when you receive money. That is why we say on the credit side is only revenue, liability, or equity. Revenue, liability, or equity. So that's why it can be a revenue. Okay, it can also be a liability. It can also be equity. So it depends on the nature of the money that you receive. All right, it depends on the nature of the money that you receive. So it can be a revenue, okay, but you must remember sometimes when you receive money, it becomes a liability. That's why on the credit side, you don't just have revenue, you also have liability. So this is the liability part. All right, and this is the equity part. Probably the money that we receive is not our income. It can also be equity, contribution from the shareholders. All right, it can also be contribution from the shareholders. So it can be also part of what money you receive, but it may not be a revenue. That's why we have to be careful about this. All right, and when it comes to revenue, please remember we also have other income. So it's not just the revenue. So you must also consider, even if it is a revenue, it can be a revenue line item, that core revenue. It can also be just a commission, or it can just be a government subsidy. For this year, we are suffering from, not this year, since last year until this year, we are suffering from this COVID-19 pandemic problem. Okay, so with this problem, businesses are suffering and government is helping us. I mean, government is helping some of us. Those who suffer are being assisted by government with cash. Is that your revenue? No. Your business is not getting assistance from government. Your business is actually to do business. All right. So when the government gives you money, it's still money. It's not a liability because you don't have to pay back. And government is not your shareholder. So it's not equity. So it can be an income. In a way, it can be an income, but it shouldn't be a core revenue. It's not even material. You probably make 1 million a year and government is only giving you 20,000. Okay, so it should be put under other income. or it should be offset in your expenses. If government is subsidizing the salary or wages paid to your employees, you probably just use that to offset your employee expenses, salary expenses. All right? So that's why we say for revenue recognition, we have to be careful about that. Okay? All right. So I'm going to go through with you. I will go through with you the different types of revenue, because in your ACCA FR exam, what we need is actually, what we test students normally are the different types of revenue in your MCQ. Okay, so anything can come up. In your MCQ, that is one thing. Number two, in the preparation of financial statement in section C, we can also test that as one of the adjustment. Normally, the adjustment would be an adjustment from an error made by junior accountant. You know why? Because in reality, that is what happened. When you recognize revenue, a lot of problems arising from the three things that we covered just now. Timing difference. No, I don't want to use the word timing difference because you will get confused with IS12. Timing problems. Okay, the cut-off date. Sometimes you receive the revenue, people pay in advance, but it's actually for next year. Maybe, for example, you provide education services. You provide classes. Okay, people will start paying you in December, but it is actually for January. So that is one of the problems. So you need to take out the revenue and put it under deposit. Number two, it can also arise from, what is the second problem just now? Can you still recap? Can you still remember that? The first problem, number three is what? The performance obligation, whether you earn or not the revenue. Sometimes people pay you in advance, but you have not earned that revenue. Okay, and number three is because of the nature. Okay, not every income is a revenue. Revenue must arise from our core business source. Okay, so other than that should be put under other income, right? Okay, so now let's go through the different types of revenue first, then we see the example. Okay, so what are the different types of revenue based on the past questions? Types of revenue that you can see, all right? So we can see here, okay, number one, you can see deferred income. What is a deferred income or deferred payment? Deferred income or deferred payment. Sorry, it's not a deferred income. It's deferred cash, deferred receipt, which means that you do the work now, but you are going to receive the money later. Okay, so this is deferred receipt or deferred payment by the customer. So the customer does not pay now, the customer pays you later, but you have already performed your obligation. So how you come up with the number? What is the measurement like? All right. Theoretically, students will always be able to answer. They will answer. If I ask them, hey, you have sent the car to the customer hasn't paid. So can you recognize the revenue? Most candidates or all candidates will answer yes, because they are already familiar with that, because they already performed their obligation. So in terms of earnings, in terms of revenue earned, yes, you have earned the revenue. Okay, but the problem is how much can you put in your income? Okay, so deferred receipt and deferred payment, you have to be careful about this. All right. Okay, number two. Number two, maybe you have a problem of principal versus agent. So what is the issue now? The principal versus agent is the easy one. The issue is whether it is a core revenue or it's not a core revenue. Okay, if it's not a core revenue, then please consider that as a commission income. Okay, all right. But if your business is earning commission, okay, for example, now you have so many platforms selling goods sold by other people. All right, you are just enabler between the two parties. So you are earning commission. For example, Shopee, as far as I know, Shopee only takes 2.12% from the final payment made by the customer, including postage, packaging, boxes, or whatsoever you pay. They will only charge 2.12%. All right, but Shopee doesn't take the inventory. Shopee only takes money and pass the money to you after deducting the commission when you already send the goods to the customer, right? Okay, so if your business is earning commission, then that is your core business. So the commission shouldn't be under other income. Your commission should be the revenue. You understand what I mean? So that's why I say it's quite complicated here. Okay, so you also have to look at the nature. That's why we say the nature. Okay, so principal versus agent. If you are just the agent and you are not the owner of the inventory, then you only calculate commission. But it also depends whether the commission should be revenue or other income. Okay, all right. Number 3, what else do we have? We also have the problem of what do you call that? It's actually still something like agency problem, but the thing is, it is just third party. Okay, third party seller. Okay, what is a third party seller? Third party seller ni, for example, hypermarket or supermarket. Okay, sometimes you as a supplier of the goods, you have a warehouse. People don't go to warehouse to buy goods. You put the goods in Tesco, you put the goods in Giant, you put the goods in cold storage and so on. So those are the third parties, but the goods are still owned by the supplier. That's why sometimes you see the promoter inside the hypermarket, they do not know anything about other products. They only sell their products. They are promoting probably a milk, a type of a brand of milk, but you are going around and asking them about, Kak, where is this, and they do not know anything about it. You know why? Because they don't work for the hypermarket. They only work for their product. So that is what we call third party seller. So if it's a third party seller, how do they recognize the revenue? Okay, so these kind of issues need to be addressed, and we are going to look at it today. Okay, all right. So what else can we see here? Number 4. Why I use blue pen? Because this is totally different from 1 to 3. This is if you earn revenue over time. Okay, this is different from 1 to 3 because this is revenue over time. So example of revenue over time. The most popular one is construction contracts, because you perform construction over time. You don't complete the construction today. Okay, construction. And number 2 is services. Okay, what kind of service? Example, tuition classes. You pay your fees in probably December, but your class will go on from January until the next December, right? So what do you say now? The college or the tuition centers, the institution, they do not complete their service until next December. Okay, but they incur expenses to pay the tutors, to pay the teachers, to pay the lecturers. So how? Actually, there is a lighting problem. Can you still see this? Not lighting problem. The lighting is too bright. But can you still see this?
Yes.
Okay. Yes, all right. Okay. So coming back to this. So the issue is, can they still recognize the revenue? Of course they can. But there is a method for you to measure that, because it's not fair for you to say this particular company for a whole year, January until December, got no revenue at all because they have not completed their service. So it's true that they haven't completed their service, but they have earned up to whatever they have performed. So that's why we say this one, we put under revenue over time. Okay, so this is different. For this one, it's actually what we call as at a point in time. A point in time. So you do it only once. Okay, so once you delivered the service or once you delivered the goods, everything can be recognized. Okay, so that is a point in time. For overtime, there is a certain type of revenue measurement that you need to consider. Okay, all right. Okay, semua? Alright, so if you're good at this, then I think should be okay. So let's look at the example, and then after covering revenue, we will discuss a bit about we will discuss a bit about goodwill. Okay. All right. You do not have this question with you now. If this is your first time joining me in the class, okay. But don't worry, I will give you the material later, because if I give you the material now, then it's going to be less efficient for you all to learn at home. Okay. So that is just how I do things. But don't worry, in the real IRC class, we will give the material in advance, because you need to print out and so on. Okay, wait, sorry, I need to share screen. It's the meeting ID. 240460. I have to change the setting. Allow participant. Wait. Can you see my screen? Not yet.
Not yet, sir.
But it's can you please give me a minute?
Of course, sir.
Apa yang susah sangat ni? Hmm, 823 2404. Okay, can you see the screen? Not yet?
Not yet, sir.
No, not yet.
Aduh, kenapa tak boleh ya? Uh, hmm. Dah enable dah pun sebenarnya. Dia tak. Live stream. Am I still the host or has it been passed to other? Yeah, I'm still the host.
Sir, off camera kot. Stop video.
Tak kan?
Sir, stop video kot. That's why tak nampak.
Tapi tak boleh. Can you see me? Sorry, you can see me, but can you see any screen sharing? Tak boleh.
Tak boleh, sir?
Tak ada, sir.
Tak nampak.
Itulah, pelik pula. Tak, dia kata only host can share screen. I am a host. Okay, sekejap, let's try. Okay, sekejap. Try lagi sekali Bismillahirrahmanirrahim. Okay, so they just want Bismillah lah as a password. Alright. Okay, alright. So now, let's see the first one. Okay. I think some of you have probably tried this question before, but it's okay. It doesn't matter because I would like to remind you again that FR paper is a technical paper. That's why we call it applied skill. It's okay for you to do same question, even on your own. I did that also as a student last time. But you just have to make sure whenever you do the question, you are learning something from there. Okay? Don't simply do without understanding anything. Alright? Okay? Okay, so now, sekejap dah jadi masalah lain pula. Kejap, you nampak muka siapa on the screen now? You nampak Alia ke you nampak Sir?
Nampak, sir.
Oh, you nampak Okay. So, I je lah yang tak nampak diri I sendiri sekarang ni. Okay, dah. Alright. So, this is an example of question. The first one, this is a question where we have to see deferred payment. This is a question where we see deferred payment. Okay, what is a deferred payment? You deliver the service now, but you get the payment later. Okay, so for example, you see here, Heinberg is a car retailer, okay, which means it sells cars, okay, and on 1st of April, Heinberg sold a car to Latterly on the following terms. All right, okay, what is the total amount? Listen, ni total amount. Credit to profit or loss. And year ended 31st of March 2015. Okay, when question come out like this, total amount, it means that anything that can be included in your P&L. So it can be revenue. It can also be other income, such as interest income, other income itself, right? So that's why we say total amount. So we don't just include the revenue. Although if you get A, B, C, D as answer options, one of the answer option would give just the revenue. So please do not make that error in your exam. Okay, when they say total amount of expenses, for example, or maybe they say total amount of income, it refers to everything that is in the P&L. Okay. All right. The selling price of the car. Listen, the selling price 25,300. If the customer pays you right away, it is very simple. Debit bank 25,300, and then you credit revenue 25,300. This is if you get outright. This is if it's outright sale and you get cash payment. So you just debit bank and credit revenue. Okay, so it's very simple. But the problem now is they only pay half cash. So the other portion of money is not being paid now. Okay. Alright? Now, since that is the case, you have three problems in your revenue. Number one is timing. So that is the first problem. Now you have the problem with timing because you delivered your service today, but you received the money later. Number two, in terms of earnings, have you earned the revenue? If you have delivered the car, it means you have earned the revenue. So you have performed your obligation. What is our problem number three? Nature of revenue. So in terms of nature, it is a revenue. Why? You are a car retailer and you are selling a car. So we have solved the second and third problem. You have delivered the service or delivered the goods. You also confirm that this is indeed the revenue. But now we want to solve the first one, which is timing difference. Okay, the timing where you earn the money and you receive the money, that is different. Okay, so out of this amount, 25,300, 12,650 is received cash. So this is what you take at full amount. Because the first one, there's no timing difference. You straight away can take the 12,650 at full amount. Okay. The problem is the second one, 12,650, but you are only going to get this money 2 years after the sale. All right. So there is a timing problem there. So because of the timing problem, you cannot take full amount. This one you don't get cash. You give them credit or loan. Customer pay later, so it's a loan from you. So what you do, you take the present value, discount for 2 years. Okay, that is also the reason why you have this 10% per annum. Okay, that is also the reason why you have 10% per annum. That is for you to calculate the discount factor, and it is also why you are given the 2 years. That is for you to calculate the discount factor. All right. Okay, so let's calculate the discount factor. 10% is 1 over 1.10%. Okay. All right. And because it is 2 years, you put power 2. So what is your discount factor here? Can somebody calculate for me? What is the discount factor?
0.826.
0.826. Okay, so 0.826 is the discount factor. PV is 12,650 times by 0.826. What is the answer?
$10,454.54.
Okay, so 10,454. Right? Okay, so that is the amount of revenue because we take present value. Okay, so you cannot take 25,300 in the first year. You have to take this amount plus this amount. Okay, so 12,650 plus 10,454. What do you get?
23,104.5.
23,105.
104.
23,104. Is that correct?
105.
Yes.
What? 105.
154.
Okay, Yelah, you dah round off tadi kan. Okay, let's say it's 105. Right? Okay, so this is the revenue. So can you see the difference? So the revenue cannot be taken as 25,300. It should be lower than that. 23,105. Why lower? Because of the present value. Because of the discounted value. All right? The money that you receive in future, the value will be lower than whatever you receive today, if it's the same amount. Okay? So for example, 1 million today, in 10 years time, it's not going to be worth 1 million similar to now because of inflation and so on. That is why we take the revenue to be lower. Okay, that is the reason why people say accountants ni stingy, accountants ni detail, annoying, suka kira benda yang tak sepatutnya, because you receive You receive lah. Why you want to calculate all that? But that is the economic reality. That is the economic reality of the money. Okay? You can ask yourself, 10 years ago, what can you do with 5 ringgit? And now, what can you do with 5 ringgit? Okay? So that's why we say we need to calculate this. All right? Okay. Now, I'm going to remove these answers. Okay? Okay? So, that is the revenue part. What happened? What happened to the remaining amount? Because customer in the end going to pay you 25,300. So debit and credit should be balanced. So if you credit today 23,105, what happened to the rest of the money? Okay, listen carefully, right? Today you are going to receive 12,650 because customer is going to pay that as a deposit, right? At the same time, you are going to put this as trade receivable, not other receivable. This is trade receivable because it arises from your business trading, your normal business trading. So trade receivable is this amount. Sorry, trade receivable is the 12,000, berapa tadi? 10,454. Okay, 455. Okay, so this is from the trade receivable. 454 or 455 lah, whatever number yang tadi. Okay, this number. Alright, so that is the receivable amount because you are not getting the money today. That's why we put it as receivable. Okay, now is the tough part. Not lah tough because students always make problems here. Okay, students always encounter problems in this table. But I don't think actually it's a problem. It's actually you normally forget this. Alright, you must remember this is opening balance. Alright, so 10, 4, 5, 5 or 10, 4, 5, 4. Let's round off later. Okay, 10, 4, 5, 4. Okay, opening balance. When you sell the car, 1st of April 2014. Okay, during the first year, you have to unwind. Whatever you do as a present value, remember, you need to unwind them back later. So, you unwind for the first year. If you discount the number over 2 years, you need to unwind back over 2 years. So, let's unwind for the first year because we are in the first year, 2015. So, 10, 4, 5, 4, how to unwind them? Just now you divide 1.1 power 2. Now, you times 1.1. You times the 10% again and you times 2 years. You do it 2 years. All right. So let's do the first year. This is unwinding of interest. You reverse back whatever you did just now. So you times with 10% because it is 10% per annum. This one should give you 104, 1045. Okay. Do you receive any cash payment in the first year? The customer is not paying anything in the first year. He is only going to pay you after the second year. So in the first year, no money will be received. So dash, no money will be received. Okay. So what is the total balance at the end of the year? 11. 500. Is that correct? Yeah, around there lah. 11,500. Clear? Okay. All right. So now you have a revenue 23,105. You also have interest income. It is an other income, but it's interest income. 1045. So what is the total credit to P&L? This is your interest income, not the 11,500. That one is receivable. So what is the total income now? Cast for me, please. 24,000.
24,150.
So this should be the final credit to profit or loss.
So it is 24,105 or 24,150.
Sorry, 105 or?
No, the answer is different on the left and right side of your screen.
It's 150, is it?
Yeah, 150.
Okay, 150. So 24,150. Is that correct, everybody? Okay. All right. Do you have any question for the first one? Because this is one of the most important part, the deferred payment. All right. Everything okay with this?
Sir,
Yeah.
sir, yang 23,105 tu bila dia nak revenue saja
Yes, betul. 23,105 is
okay,
just
okay.
the revenue. That's why I say it goes back to the third problem just now lah, nature of revenue. Because the revenue part is only the 23,105. The other one, the nature is interest income. So it's still an income, but it should be put under a different header. Okay?
Oh, okay, okay.
Because we are giving loan to our customer. When you give loan, by right, you get interest. So if you don't get any interest, you calculate the interest that you assume to be there. Okay, so 1045 is assumed to be the interest.
All
Right?
right, thank you, sir.
Okay, the rest, are you okay with this? Do you understand the concept and you understand how to calculate? Okay, there are two different things here. The first one is concept, the second one is how to measure. Okay, all right. So we are actually short of space. That's why my handwriting becomes like this. But if you're not clear with anything, just ask me lah. Okay, all right. Okay, I just want to clarify here. If you charge interest, to your customer, you say that, okay, if you want to take this as credit, you need to pay 5% per annum, for example. Then the situation is different. Okay, what we do now is what we call as interest-free credit. Okay, because right, in reality, if you buy something, if let's say I sell you this thing, okay, let's say this is some electrical equipment or whatever. If let's say I sell you this, okay, I'm selling you this at 100 ringgit, okay, and I'm okay if you want to pay me later. Okay, so in that case, do you really think that this thing cost me 100 ringgit? I mean, this thing is going to cost you 100 ringgit? No, it's actually already inclusive of interest. But I publish this as an interest-free credit because I want people to buy from it. It's not really free. There's nothing free in this world. Okay, that's why we accountants, we always consider the economic reality of things. Okay, for example, another example would be you buy a car, okay, and then they say that you get 5-year free service. Is it really free in reality? I don't think so. It's not free. It's actually all inclusive. They have already measured everything and put it in their selling price. But they publish that as something free for marketing purpose. So that's why at the back end, as accountant, we need to calculate. Okay, if you do tax in Malaysia or in any other country, we have so many things. For example, deemed interest. Deemed interest is when you provide loan to your directors, but you don't charge any interest to them. But for the tax authority, they want you to calculate the interest and they want to charge you tax on that interest income because by right, you should be charging interest. But if you don't charge interest, they will assume that there is interest charge. So they will put that as deemed interest. So that is what I'm saying about economic reality. Okay, all right. Next, delta. This is about advance payment. This is no longer about the interest, the free interest. This is advance payment. This is a situation when a company receive advance payment. That's why kan, adik-adik yang budiman, when you work as accountant, you always need that skeptical mindset. And I would say, based on experience, that is the reason why people don't like us. In the office, the commercial people, normally they don't understand what we do, so they don't like us. You cannot simply accept a number or a figure that people give you. Okay, you need to interrogate further to ask them, but you need to know what to ask. Okay, and to know what to ask, you need to learn and complete the course first. All right. Okay, for example, this one, we are asking about two of this following correct accounting entries for Zyeera, year ended 31st of March 2007. Okay, all right. So on 31st of March, Delta received an order from a new customer. So this is one of the things that you need to consider. Is it a new customer or the customer has been dealing with us in the past? Because, okay, dengar, this one is a skill module. Skill module is okay, not much judgment. If you progress further into SBR or AAA, you need to consider the general opinion or the right knowledge and also the application wise. So now it's just the right knowledge. It's not so much about the application. But in future, when you progress into higher level paper, you need to state the general opinion first. In general, advance payment cannot be taken as revenue. That is the general opinion. However, since the customer is not a new customer, he has been dealing with us for the past 20 years, and in past practices, this customer will pay in advance, but they will take all the orders. And the company should be able to complete all the orders, just like 20 years ago. So that's why it is still a revenue. You faham tak? So dekat situ, there is application problem. Okay, so if let's say you start work right after your fundamental paper, don't come and blame me saying that I don't teach you the right thing. Okay, because this is actually skill module. We only teach you theoretically macam mana nak apply lah. Alright, but in future you need to exercise a certain degree of judgment. Alright, okay, so generally if it's a new customer, they pay in advance, it's not a revenue. Why? What is the problem now? The first one is timing problem, because you receive the money earlier. The second one is earning, whether you earn the revenue or not. You earn the revenue or not? You don't earn the revenue because you only earn if you have delivered the goods that they order from you. The performance obligation part. Okay, so for products, sales value 900,000. Okay, but they already give you deposit, order $90,000. Okay, all right. Delta had not completed credit referencing. Why is this information important? To prove to you that this is a new customer. Because as I mentioned earlier, if this is a past customer, the customer that you had in the past, you have dealt with in the past, our approach will be different. So credit referencing means you do not know this customer at all. You have not checked their credit background or whatsoever. You are not planning to give them credit yet. Okay, and you also have not dispatched the goods, so you haven't performed your obligation. Okay, so in this case, money has been deposited to you, so you still have to debit bank. There is no other option because they already bank into you. So if not, you cannot do your bank recon properly. You cannot deal with your bank statement properly. So debit bank, still debit bank. The problem is the credit side. Remember, I said just now, we have three different credit entry: revenue, liability, equity. Zyeera is not your shareholder, so it cannot be contribution from shareholder. It cannot be equity. Zyeera, is it a revenue? No, because you have not earned this, so it should be a liability. All right, so this should be a liability. Okay, so debit cash is correct because the cash has been received. All right, but it's going to be a liability under the header of deferred income. So it's a current liability. Defer means what? Defer means you extend, kan? Postpone, extend, whatsoever, something that is going to happen in future. Okay, clear or?
Clear.
Okay, all right. So if you're clear about this, then okay. Senang kan? Debit cash, debit bank ni antara dua lah. Okay, people don't go and bring cash 90,000, so it's okay to debit bank. But if it is given as answer option, then you just have to take what it is. Right? Okay, this one is for you to practice on your own because this one is similar to question number 1. Okay, but here the question is different in the sense that it's only asking you about revenue, not the total credit to P&L. Okay, can you answer this question? Let's go through the question first, then you answer. Okay, Salvat sells good to a customer on 1st of January 2001. Okay, the price of the goods is $100,000. The terms of the sale that customer pays 50,000 on delivery. So out of 100,000, cash is 50,000. So if cash, you can take full amount. Another 50,000 is deferred. So if you receive later, you have to take at present value. When we talk about present value, you need to know how long and what is the discount rate. It's going to be 5% and remaining is on 1st of January 2002. It's going to be over 1 year. Okay, please calculate the revenue, just the revenue, not the interest income. Let's see what you get. All right, you get the right answer?
97,619.
97,600. Okay, is there any other answers? No? So everybody gets the right answer? Okay, so assuming that your answer is correct, after a year, so this is the revenue. What should be the interest? If let's say we are looking for the interest should be the remaining balance, 100,000 minus the 97,600, because this is only 1 year. If it's 2 years, then the interest should be calculated lah. You tak boleh simply divide the interest into 2. You need to open up the table that I showed you earlier. Okay, so for example, this one, the receivable is 50,000, the 47,600. Okay, so the interest is 5%. So 5% from this is 2,300. You don't receive any payment, so at the end of the year, it becomes 50,000 receivable. All right. Okay, so the interest would be 2,300. Okay, clear? Okay, so if you are clear about this, then okay. 5-step model. Okay, what is our 5-step model? Remember the 5-step model? 5-step model is not in IS 18. IS 18 is the previous standard, right? 5-step model is only introduced in IFRS 15. The reason is because, as I said earlier, a lot of practitioners are having problems in recognition of revenue. You do not know how to recognize, what to recognize, how to measure, and so on. So that's why part of the 5-step model, okay, number one, you need to identify the performance obligation. You need to identify performance obligation. Why is this important? Because you need to know what is when you earn the revenue. So what is your obligation in that contract? Okay, whether you receive money or not is not important. We don't ask you to identify the money. We only ask you to identify the performance obligation. If you are supposed to give them the car, make sure you know that the PO is the car. Okay, it's the delivery of the car. Okay, and then you also need to know what is your contract with your customer. Between you and the customer, what is the contract? What is the role of each of you? The customer will pay you later or pay you now and whatsoever, all right? And then you need to allocate the transaction price. Why allocate? Why allocate the price? Because you may have different performance obligation. Like I said to you earlier, okay? I probably sell you a car and I publish an advertisement saying that you are going to get 5-year free service. So that is already two performance obligation. Selling a car, giving you the car, and also providing you 5 years of free service. Okay? Okay, so if let's say I publish it that way, so it's already part of the contract. That's why I need to allocate your transaction price into the different performance obligation. Okay? All right. So assess whether significant risk and reward have been transferred. It is a good idea to do this when you want to recognize revenue, but it's not part of the 5-step. Okay, in the 5-step model, we only consider the last one is the performance obligation, whether you have performed or not. We call it performance obligation, we don't call it significant risk and reward and so on in the 5-step model. Okay, all right. Okay, if you're clear about this, then okay. Let's see the performance obligation part. Okay, number 5 is about the performance obligation over time. Okay, OC signed a contract to provide office cleaning services for a client. Why do I say this over time? Because it is provided for a period of 1 year. Okay, so the period starts on 1st of October. The fee is $500 per month. So after a year, it should be $6,000. Okay, and can you see the contract requires client to make one payment covering 12 months service in advance. Okay, the cost for OC was estimated to be 300 per month for wages, material, and admin. Okay, and they already received the $6,000 on 1st of October. Okay, so now here, when you already receive the money, is debit bank, 6,000, credit, deferred income, liability, because this is payment in advance. All right, this is actually a payment in advance. That's why we say we credit the deferred income. This is similar to Zyeera just now. We did Zyeera, kan? So this is similar to Zyeera because it is a service that is going to be provided later. That's why we put it as deferred income. Okay, now you have provided the service up to 31st of March, October, November, December, January, February, March. 6 months. 6 months has been provided. So this amount of liability should be reduced. Okay, why do we reduce that? We reduce because we can already recognize that as part of our revenue. So from this 6,000, okay, you release the 6,000 into your P&L. So this is a credit entry. What you can do now is you reduce the deferred income. So you debit the deferred income, 3,000. You credit your revenue, 3,000. Okay, sir, why 3,000? 3,000 because you have delivered the service for the first 6 months. So you already earn the 6 months income. You already earn the 6 months income. All right. So for our profit or loss, this is actually a profit or what we call as revenue lah, and the amount should be 3,000. Okay. Sorry. Wait. Tak habis lagi. Revenue 3,000, but they are asking about profit kan? So you kena minus the expenses. So $300 per month for wages, material, and so on. So it's 3,000 minus 1,008. So your profit would be 1,200. Okay, all right, because it is asking for profit or loss. If it's asking for revenue, the revenue should be 3,000. If it is asking for liability or deferred income is the current liability. So if it's asking for the current liability, then it should be 3,000. Okay, happy? Okay, happy semua? Tak buat DND tadi. Alright, anything you want to ask me? No need? Okay, clear? No questions so far?
No, sir.
No.
Okay, so if there's no question, let's see commission. Nampak tak? This is an old question actually, taken from ACCA. This is the past standard. Okay, so now we no longer have IAS 18 because this is 2014 paper. So that's why you have to be careful about this. Now it's actually IFRS 15. Okay, there are a number of changes. There is a number of changes that you need to consider, but it's okay. I will show you the changes later. Repro, a company that sells photocopying equipment, has prepared its draft financial statement. It has included the following transactions in revenue at the stated amount below. Right? Okay. So which one should be the right one? Nampak dekat sini, it sells photocopying equipment. Okay. So agency sale 250. Kalau the sale price is 250,000, if Repro is the agent entitled to a commission, can you take the sale amount? No, you cannot take the sales amount. Okay, regardless of whether you take the money or not. Okay, for example, just now we have Shopee. Shopee only take the commission, but they receive money on your behalf because that is the whole purpose, to protect the customer, from the risk of being cheated or being scammed by suppliers. So that's why they take the money. But regardless of whether you take the whole amount or not, if you are entitled only to a commission, you should only credit the commission into your P&L. Okay? So, kalau it's an agency sale, if the selling price is 250, is that correct? Can you recognize 250 as a sale, as a revenue? No. Okay, you have to only come out with a commission. Okay, sale proceed $20,000 for motor vehicles no longer required by Revenue. If you sell your motor vehicle for 20,000, is it a revenue? Oh, is it a revenue? No, it's not. You know why? You are not a seller of motor vehicle. This is your own PPE. There should only be gain or loss on disposal. It shouldn't be any revenue because you are not selling motor vehicle. You are selling photocopying equipment. Okay, so this is also incorrect. Clear? Okay, sales of 150,000. This is the selling price. Okay, the amount invoiced to and received from the customer was 180. Okay, but 30,000 is for separate performance obligation, which is a deferred income because you are only going to perform for the next 2 years. Okay, so in this case, they debit bank 180 because customer already paid in full, but they credit revenue only 150,000 because that is the cost of the machine, and the remaining balance is credited to liability. Okay, to do what? Is credited to liability to see our to put that to be released later when you perform the obligation. Clear? Okay? Happy?
Yes.
Right? So this should be okay, but you cannot be confident. You have to read, you cannot be overconfident. You need to read D first. Sale of 200,000. Can you see here, to an established customer, not a new customer? Okay. And then will be paid in full on 30th of September, cost of capital 10%. Can you recognize 200,000? No. You need to do the present value because they are not paying now, they are paying later. So it shouldn't be 200,000. It should be present value of 200,000. That's why it is incorrect. So the answer should be C. All right? Happy? Any questions so far? No question?
No, sir. No, sir.
Okay. Can you do number 15 for me? All right. What is the answer for this one? Recognized as revenue, because they kata the ticket agent sells tickets for $96, including sales tax of 20%. The ticket agent earns a commission of 25%. So what should be the answer?
I got $20.
$20 as the commission. Okay, what is the selling price first without the sales tax?
6.8.
80.
80.
80?
Yeah.
$80, okay. So from $80
Multiple by 25%.
multiplied by 25%, so the commission should be only $20. Okay, semua orang dapat answer sama?
Dapat.
Okay, so that means you already understand all the different types of revenue, because we already covered the interest-free credit, the commission, the advance payment, and so on. All right. Okay, now let's go through the. We have also covered different income together, right? So now let's go through into the construction contract. Okay, what about this construction contract? Listen carefully. Firstly, about this construction contract, you need to remember, in construction contract, we have two different disclosure. Number one, SOFP. Number two, SOPL. All right. So for SOFP, you have the contract asset. Okay. You also have the trade receivable if they have not paid you. If you invoice them but they haven't paid, that is the trade receivable part. Contract asset is the part where you have done the work, you have earned the revenue, but you have not invoiced the customer. Okay, what about SOPL? SOPL is your revenue and cost of the construction. Okay, all right. Okay, so let's take a break. Let's take a 5 minutes break for you to go to washroom and so on. We'll start again at 1:15 to cover this part. All right. Thank you. See you.
Right.
All right, sir.
All right. Okay. Izzati. Let's see if there are any other people waiting to join. Okay, tak ada, eh? Okay, so let's continue. Are you back at your desk? Okay, so this is for construction contract. Okay, the approach is slightly different now that we have changed the standard and the calculation method and so on. Okay, so how is it different? Okay, for revenue and cost for the SOPL part, sorry, for the SOFP part, you must remember even for construction contracts, we consider the revenue earned. Okay, we consider the revenue earned rather than simply taking the amount that you invoice and so on. Okay, so how to consider revenue earned? Okay, so for SOPL, when you want to consider the revenue earned, we talk about the project progress. Okay, how much progress of the project? How many percent of the project has been completed? So that is on the revenue recognition. On the cost recognition, we take whatever cost that we have incurred. Whatever cost that we have incurred. So don't simply take the total cost, including estimated cost and so on. We have to take the cost that we have incurred. Okay? Receivable amount is invoice, but not yet paid by the customer. Okay? And as for the contract asset, is actually revenue earned based on the completion rate minus the revenue earned minus amount invoice. Okay, clear? All right, so that is the formula that we need to apply. Okay, let's see the first one. Ying entered into a contract to construct an asset for customer on 1st of January 2004, expected to last 24 months. Okay, the agreed price for the contract is $5 million. All right, the cost incurred on the contract were $1.6 million. Can you see here the cost incurred? Okay, so here we already know what is the cost of sale. Okay, the estimated remaining cost to complete were 2.4 million. On the 20th of September, Ying received a payment from the customer. This payment has already been received. Okay, and this is equal to the invoice. So there's no trade receivable. You know that there is no trade receivable. Why? Because all the amount that you invoice has been received. Okay, Ying calculate this is the most important part because this is where we start the progress. Okay, the progress is based on amount billed compared to contract price. What is the amount billed? 1.8 million. Okay, what is the contract price? The contract price is 5 million. Can you calculate this for me? Is it 36% or 38%?
36.
36. 36%. Betul, eh? Alright. So 36% of the construction has been completed. 36% of the construction has been completed. Alright? Okay? Clear? Okay, let us do the first one. Contract asset. What is the formula for contract asset? Because question is asking for soft P. So soft P is contract asset and receivable. But receivable is already taken care of by the payment. So there should no longer be any receivable. Okay. The contract asset is calculated based on revenue earned. Revenue earned minus amount invoiced. Okay, revenue earned minus the amount that you invoice. So what is the revenue earned? The revenue earned is based on the progress, 36% times 5 million. How much have you invoiced? 1.8 million. So, what is the total income?
One 1.4.
1.4. 1.4. So this should be your contract asset. If your calculation is correct, that should be your contract asset. Okay, because I don't calculate with my calculator here. Betul 36% tadi. Are you sure it's actually 1.4?
Dapat zero.
Let me calculate.
Zero.
36% kali dengan 5
Zero,
million.
zero.
Macam tak betul je. Dia percentage completion tu, tapi kan kalau percentage completion macam ni, takkanlah. Let's see the progress of amount. The progress is based on amount bill compared to the contract. Wait, sorry. Saya takut the question is outdated. Let me check the new question, the edited question. Ying entered into a contract 24 months, 5 million, the cost incurred 1.6, 2.4, Ying received. Okay, so the question is outdated. Kalau you calculate this way, if you calculate this way, actually you dapat zero kan? Betul tak?
Yes, sir.
Zero.
Yes, but because all the revenue earned has been invoiced kan, correct? Okay, so for this question, no, I'm not saying this question is wrong in what way. Maknanya memang nil lah. Maknanya dia tak ada contract asset because all the contract asset has been invoiced, so there shouldn't be anything. Okay, but I want to change the question so that you know, kalau saya tukar soalan ni, if let's say I give you the progress rate of the contract is 38%. I want to give you the progress rate so that you get to calculate anything. But anyway, the answer for this question memang nil. So don't worry. Your answer is correct. Nil is correct. Yang 1.4 million tadi maybe ada report, ada error dekat calculation. But if you do 36% times 5 million minus 1.8 is nil, that is the answer for this particular question. Okay? But if let's say I change the question to 38%, okay? Then here is 38%. What do you get?
100,000.
Huh?
100,000.
100,000?
Yes.
Okay, so the contract asset should be 100,000. Okay, clear? All right. In the P&L part, if let's say you use this edited question, revenue is 100,000. Okay, the cost should be cost incurred. Cost incurred is 1.6 million. Sorry. Bukan 100,000, 1.9 million. Okay, cost should be another 1.6 million. So the profit is 300,000. Okay, clear? All right, that is on the SOPL part. If you want to know the revenue and also the cost. Revenue is 1.9 million, 38% multiplied by 5 million. Then the cost is 1.6 million. Okay, any questions so far? This is actually a new approach. It's different from the approach that you used before. If you have applied the past approach, please make sure to change now, because this is a new way of doing things. All right, this is a new way to measure our construction contract revenue and costs. Okay, all right. Do you have any problem in this question? No, no problem at all. Okay,
No.
tak ada apa ya. Okay, kalau tak ada apa bagus, we have covered most of the things in our revenue. Not all, most of the things, because we are short of time. We cannot do many things in 2 hours. So that's why we have to start doing the second topic lah, the goodwill. Okay, so goodwill. Okay, introduction to goodwill. Macam mana nak matikan screen? How to, okay. All right. So what about goodwill actually? What is goodwill? Okay, listen carefully. Goodwill is an intangible asset. All right. When you talk about goodwill, it is about IFRS 3, and goodwill only exists in group financial statement. So in your single entity financial statement, you shouldn't see any goodwill. It remains at cost of purchasing the company. Okay, all right. So that is goodwill, IFRS 3, and it is only seen in the group financial statement. All right. Okay. Okay. So let's be clear, because I have prepared something for you to see. So I'm going to share the screen again. I just want you to know that goodwill using IFRS 3 is an intangible asset. It shouldn't be amortized, okay, but it should be reviewed under impairment review every year. All right, okay, all right. Now, okay, so this is the introduction to goodwill. Okay, let's say McDonald's, because everybody knows McDonald's. So can you see the McDonald's aeroplane? It's not a real aeroplane. It's actually, I think, one of the McDonald's outlet in America, one of the unique McDonald's outlet in America. So there's another one in Mexico or Brazil with the Happy Meal box. So my question now is, how much is McDonald's and what is the asset in McDonald's? Okay, so in McDonald's, if you see the tangible asset, of course, obviously, there will be chairs, tables, cashier computers, fixtures, fitting, the kitchen equipment, and so on. So that is what you see in a McDonald's. If you go to their HQ, you probably see all the office fixtures, fittings, equipment, PPE, and so on. Okay, but what is the value of McDonald's? Okay, as you can see, McDonald's is the top 10 most valuable American brand in 2020 based on company value. Okay, based on the company value, is top 10 most valuable US brand together with Apple and so on. But the brand alone is 143.8 billion US dollars. So it is placed in number 7. If I'm not mistaken, the first is Apple again. So that's why you see long queues at every McDonald's, regardless of COVID or anything. Okay, so you still see the long queues. All right. So now we are talking about the concept of goodwill and bargain purchase. Okay, I want you all to understand something. Okay, listen to me. Okay, let's say you buy a company. Okay, let's say you buy a business, or let's say you buy a company. So you pay a certain amount of money, okay, or anything that is equal to money. The question is, okay, what is it that you pay for? Okay, why is McDonald's, KFC, A&W, and so on have different value? If you go to the Philippines, Okay, McDonald's doesn't work there. The business of McDonald's is not as good in Philippines. But if you come to Malaysia, okay, you know that McDonald's is very good. McDonald's is doing very well. You can see the long queues outside. Puasa ke tak puasa ke, PKP tak PKP, COVID tak COVID, tak tahulah ada perang ke tak ada perang. Memang McDonald's tu akan full. Okay, alright. So it's doing very well here in Malaysia. Okay, but if you go to another example would be Starbucks. If you go to Australia, I think they are more focused on their own brand, which is Dome Cafe. Here, people don't really go to Dome. Okay, not as much as Starbucks. You don't see any. You don't see many outlets of Dome Cafe here. But in Australia, people go to Dome. People don't go to Starbucks. There's no Starbucks, I think, or maybe there is, but not so many outlets. Okay, so that's why when you buy a company, how much you pay? What is it that you are paying for? Why is it different in terms of brand? Why is it different in terms of location? So you listen to me first. When you pay for a company, remember you are only paying for the asset minus the liabilities. That's all. That is the right value of a company on the surface. Whatever asset that the company has, minus all the liabilities. Okay, for example, if the asset is 1 million, but they owe a bank 300,000, that is the loan that you have to take over as the new owner. So now you only pay the past shareholders, the previous shareholders, 700,000. Don't pay them 1 million because you need to bear the loan. Okay, so that's why we say when you buy a business, you should be paying only for the liabilities, for the asset minus the liabilities. That's all. Okay. Okay. However, it doesn't work in the real life. That's why I say accounting, we always consider the economic reality. So in reality, what you pay for the business is the price that people put. That's all. Whatever price that they put, if you are willing to buy, that is the right price. Okay? So it's not just about the tangible asset. It's also about the intangible asset. So if you pay more than the net asset, that means the excess is the intangible asset that you can't value. That is what we say goodwill. Something that you cannot explain in words. Okay, like McDonald's, for example, it is probably selling their asset for only 300 million, but people are paying 500 million plus to get control of McDonald's Malaysia. Why? It's probably because of the brand and the quality of McDonald's here in this country. The opportunity, the quality, the feedback that they get from their customers, the response from the market. So that is what you are paying for. So that is goodwill. Okay, if you pay less, okay, if you're paying lesser, that is a bargain purchase. If you are paying lesser than the net asset, let's say the value of asset is 1 million, but they are only selling to you at 400,000 because they are forced to sell immediately. That means you get a discount. So that's why bargain purchase or negative goodwill is actually an income to you because you obtain discount from the purchase, right? So that is the concept of goodwill and also bargain purchase. Okay, so what is goodwill? What is this goodwill? Listen, ni yang kita explain daripada tadi. The value of a business, okay, the value of a business that exceed the net asset. The value of the business that exceed the net asset. That is something that you need to understand. Okay, so goodwill is shown as a separate asset. As I said before, under IFRS 3, it's actually an intangible asset, something that you cannot touch, okay, something that you can't explain in words. It is a non-current asset, but it has to be presented separately. Okay, it's not amortized, although it is an intangible asset. It's not amortized. Goodwill is not amortized, but you have to review for impairment annually. Review. I'm not saying you need to impair. You need to review for impairment annually. Just review. Okay. If you practice in the UK, okay, if you practice in the UK, you will see under FRS, goodwill is being amortized. Okay. And having said that, it means that goodwill has a useful life. So the useful life should be just between 5 and 10 years. So that is the practice in different countries. So like us in Malaysia, because we follow IFRS 3 under our MFRS, we only take goodwill and review for annual impairment. To us, is already sufficient. Okay. Okay. So now the goodwill. Okay. How you calculate goodwill? This is the basic formula. the basic formula would be consideration transferred. Consideration transferred is the cost of investment. Okay, all right, and then you plus the NCI. Okay, why we plus the NCI? To make it 100%. Okay, consideration transfer is the amount that you pay for the shares that you acquire. You buy the share, 80% share, people charge you only 80% of the value. You don't pay 100%. You add the shares that you don't acquire, the another 20%, to make that 100% value. Okay, to make it 100%. Why? Because we need to compare with 100% of net asset. So why 100% of net asset? Okay, can you take only 80% of a computer? No. Computer is an asset. If you buy a computer, you buy 80% ke, 50% ke, 20% ke, the computer has to be 100%. The net asset has to be 100%. It cannot be taken as 80%. That's why when we value the asset, we need to value the 100% asset. You cannot value only 80% of this computer, because the computer is either 100% or nothing. That's all. All right. So for us to compare, it has to be comparable. So it's 100% and 100%. Okay. For us to compare, we have to compare apple to apple. So that's why it's 100% and 100%. Okay. Sebab itu you tambah dia punya NCI. That is the concept. You get the concept right, you don't make any mistake. All right. Okay. Now it's always cost that you pay plus the NCI to make the value 100%, and then you minus with net asset. You minus with net asset also 100%, but net asset must be at fair value. So get the fair value. Okay. All right. The technical part. This is the technical part. So you have already understood all the concept. Now, how do you calculate this? Firstly, the first problem, payment. We have so many types of payment. You can pay a person with so many things. You can pay with money. You can also be given loan, means that you pay later. You take the company first, but you pay later. You can also pay in contingent, which means that it goes under contingent consideration. You can also pay by share exchange. You give them your shares, and then you take up their shares. Okay. You can also pay them using asset. You give them your property, they give you their company. You can also pay using new shares. You don't exchange any shares, you just issue share for them. Okay. So that is the different types of payment that you need to consider for us to get the cost paid. Kan tadi you kena calculate the cost you pay. So for the cost you pay, you need to come up with the payment. Okay, next. You need to add the cost with the non-controlling interest. So how you calculate the non-controlling interest? Okay. Nak pakai fair value? Or you want to use net asset method? Okay. Is it already given, the value? Or you need to calculate? So we have so many different things that are given by the examiner. Okay. So this is the technical part. You already understand. You need to calculate cost plus NCI minus net asset to get the excess value. The excess is actually the goodwill. But how to calculate? Number one, this you need to learn. This one also you need to learn. Next, you nak minus dengan net asset. How do you calculate the net asset? What is a net asset? Asset minus liability. Rather than calculating all the asset and all the liability, why not just take the equity? So net asset is basically the equity of the company. Okay, and all the fair value adjustment. Equity and all the fair value adjustment. Why fair value adjustment? Because asset and liabilities should be taken at fair value. So net asset should be the equity and also the fair value adjustment. All right. Okay, so why include NCI? This one we already addressed. I already say to you to make the value 100%. Okay. Okay, so these are the types of consideration that we can use to buy a company. So you can buy using cash. Okay, you can buy using cash. You can also buy using contingent consideration. What is contingent consideration? Contingent consideration is actually a conditional payment. You promise to pay the shareholders of the company that you buy if you achieve a certain condition. If you meet a certain condition, for example, if we put profit as the condition, when you achieve the profit, let's say you say, okay, if I make 100 million profit, I'm going to pay you 10,000 more. Okay, you probably don't achieve at all. But for calculation of goodwill, you need to take up the amount at fair value. You need to take up the amount at fair value. Okay, but sir, what if we don't achieve that 100 million? Okay, you only need to remeasure the liability. This is theory. When I show you example, of course you know what to do. Okay, all right. Okay, share exchange. Share exchange. Share exchange is when you provide shares. Instead of paying cash, instead of paying conditional payment, you give share to them. So share exchange must be taken as fair value at the grant date. What is fair value? Fair value is the market price of your share. If you enter into the transaction with your shareholders today, that should be the fair value that you take. Okay, all right. Okay, deferred consideration is different from contingent, because deferred consideration, when you talk about deferred consideration, okay, when you talk about deferred consideration, it's different because deferred consideration is confirmed. It's not conditional, it's confirmed. But you receive the money in future. Similar to contingent, you take in future, but deferred is already confirmed. You just getting it later. You are just getting the money later. All right. So because you take the money later, it has to be in present value. This one is in fair value. Okay, so it's different. All right. Okay. Any question you want to ask about goodwill? No? Sure? Okay. If you want to know in exam, how do we come up with goodwill question? It can go as simple as in MCQ, section A or section B. You simply have to calculate the goodwill. Okay. If you get section C question in the group financial statement, you will definitely you will get goodwill calculation. Either you get goodwill as part of C of P question, okay, this will give you around 3 to 5 points, or you get a question B just to calculate goodwill alone. Okay, just to calculate goodwill alone, that will give you around 5 marks. Okay, all right. So that's why this part is very important. Goodwill is actually not a critical area, but students always make this apa kita panggil tu error, not silly mistake, careless mistake. Okay, you always make the careless mistake. Okay, tersalah ambil share price, and then you get the number of shares wrong, and then you get the consideration. Normally it's consideration part. All right. Okay, let's see an easy question from MCQ section A, crash code. Okay, question is straightforward. It's only asking for goodwill. So this is a very good example of question from section A. Okay, so firstly, you ingat, if you want to calculate goodwill, the formula would be the cost that you pay. To make it 100%, you must plus NCI. And then you minus with you compare with the net asset at fair value. You will get the goodwill, or you will get the bargain purchase. Correct? Okay? All right? Okay, now, when it comes to the cost, okay, you have to see the question. What does it say about the cost? Firstly, you acquire 70%. Okay? In the company, there are 100,000 units of $1 share. So you only acquire 70,000 units. Okay, you only acquire 70,000 units. So if the following information says that you pay $2 per share, do not make this careless mistake. $2 per share means $2 times 70,000, not $2 times 100,000. So that's why I say the concept of goodwill is easy to understand. But when it comes to the measurement, many people make careless mistake. It's not that they do not know, it's just that they are careless, including myself. All right. So that's why we have to watch out when we calculate. Okay, 70,000 units. Next, how much you pay for this? You pay this for 800. 800,000. Okay, so this is what you pay. So this is the cost paid, cash paid. Okay, all right. So the cost that you pay is 800,000 because the information is straightforward here. Okay, next, retained earnings. Retained earnings ni equity. Ingat tak saya cakap tadi, for net asset, you need to take the, for net asset, to make things easier, we just take the equity. Okay, so retained earnings is part of our equity. Retained earnings is part of our equity. Okay, so 570,000 is for our equity. Okay, right? Let's put the net asset here. Net asset, RE. Okay, bank also has an internally developed customer list which has been independently valued at $90,000. This is the net asset. Okay, sir, internally developed customer list, we cannot consider as our asset. You are right. Okay, but that is IAS 38. We are talking about group financial statement, IFRS 3. If you're talking about group financial statement, IFRS 3, okay, if let's say the asset or liability has a fair value, you need to take. Okay, because our concern is more of fair value. So can you see the word independently valued? It means that the customer list has a fair value. So that's why we take the net asset at fair value. Fair value adjustment for the net asset should be 90,000. Okay. All right. Okay, next, NCI. They already give to you. Just now I mentioned for NCI, you are probably given the number or you must calculate on your own. Okay, now they already have the non-controlling interest fair value of 220,000. So here you already know this is 220K for another 30%. 70% is 800,000. Another 30% would be 220. Okay, so what is the net asset? Net asset is equity plus fair value adjustment. Okay, can someone tell me what is missing from the equity? Ni equity kan? What do you have in equity? Ordinary shares, share premium, retained earnings, revaluation reserve. What is missing in this?
Ordinary shares.
Betul. So ordinary share capital, take 100% at 100,000. Do not take 70,000. Why? You remember I taught you about the concept just now. When I explained the concept, I already mentioned you have to take 100% of net asset. Okay? So what is the total net asset here? 190 plus 570. What do you get?
760.
760 as the net asset. So minus 760. What is the goodwill then?
$260.
Sure? Baik. Kenapa tak ada dalam answer ni? Sekejap let me check again. Retained earnings 570, okay, at acquisition. Bank has internally developed customer list, independent value at 90,000, okay, correct. You have to take the customer list. Kalau sebab dia ada fair value. Okay, sekejap. Kalau you take out the customer list, do you get any answer yang given here?
Dapat 350 sir. 350.
Kalau you take out the customer list. Okay, listen Dia macam ni. Sekejap. Jangan confuse kat sini. Alright. It's not wrong to say that the customer list should be included. It should be if you have a fair value. Dengar betul-betul I think this part you need to understand. it's not wrong for you to say you take if you have a fair value, because it also applies to other intangible asset. It also applies to other intangible asset. If you have a fair value, okay, you have to take. Have you heard about contingent liabilities? So even contingent liabilities also we take, all right? But for this question, because the answer option is already given, okay, because the answer option is already given, it's not mentioned fair value here. It's just mentioned independently value. Okay, it's not mentioned about fair value. So let me clarify here. Because answer option is given, you need to be agile a bit here. So since your calculation, your assumption is fair value, we calculate and we get 260. But 260 wouldn't is not in the answer option, kan? So you have to know that you need to take out this number. Okay, all right. You need to try when you take out that number and you get the answer that is already in the calculation, then it should be okay. Kejap, kalau 260, if you take out the fair value adjustment, ada answer kan 350 kan, betul tak?
Yes.
Okay, alright. So in this case, listen kanak-kanak, I want to repeat once again. Kalau ada answer option, you need to be agile a bit when it comes to your assumption. Okay, but to be fair to the question, they say independently valued. They don't say it is a fair value. Betul tak? But independently valued may or may not be fair value. That's why I say, if you first assume fair value adjustment to be 90, then your answer is not there. If you want to know, that is the reason why answer 260 is not given, because it's vague if they give both answers. Because there will be certain parties arguing about that 260k and 350k. Sebab itu examiner tak include 260. Okay, because 260 is not totally wrong. It can be correct. Cuma you need to be careful because this is an exam with multiple choice answers. With multiple answers that you can choose. Okay, so that's why I say the concept that I taught you is correct. Okay, there's nothing wrong about it. Okay, to prove that is the reason why out of the 4 answer option, you don't see 260. If you want to make the question tough, you can put 260 inside. Then you will see 2 different opinions. But the thing is, 260 cannot be included because it's unfair. Because if they want to put 260, because 260 may be correct, they have to explain further. So having said that, I also want to emphasize that this particular question cannot be tested in a single question yang macam ni, single answer question. Because like I said before, it's going to be vague because people don't understand whether it's fair value or it's not fair value. Dia kata independently valued tau. If let's say they say the company value on its own, then cannot lah. Faham? Independently valued, it can be fair value because you call up the third party. Alright? So this is actually why this question is picked up to show you today that when you get 4 answers, you need to be agile a bit. You need to think more and you need to be quick. Okay? So if you calculate and you know the answer is incorrect, you should the answer is not part of the answer option. You should know what to adjust. You should know what to adjust to get the right answer. Okay? Faham tak? So sebab tu orang kata kadang-kadang accounting ni dia ada banyak opinion. But how do you choose the right opinion? So if you know your accounting, you should be able to choose the right opinion. Faham tak? So maknanya you know that there are only 2 opinions. If you do not know anything at all, you don't even have 260 or 350. So now we only have 2 because this is given, so that's why you choose. So we choose 350, assuming that the independent value is not a fair value. Understand? Okay? All right. So just to clarify again, under IAS 38, customer list cannot be included. But if you do group accounting, if you get fair value, you need to take up. So it's not just about this cost. Fair value, if you get fair value in other things like contingent liabilities or inventory fair value. Kalau you buat IAS 2, single entity financial statement, inventory you take the lower of cost and NRV. But for group accounting, it's different. You don't take the lower of cost and NRV. If during the acquisition date, you get the fair value of inventory, you need to put as part of your goodwill calculation. Alright? But as I said earlier, if you are given 4 answer options and your fair value is not part of the answer, that means the value is not really a fair value. Okay, tapi kalau macam tu punya question, memang examiner will not mention the word fair value. Dia akan guna macam ni lah, independently value. So it may or may not be a fair value. So since he did not give any of the answer option here, that means it's not a fair value. It is an independent value that is not fair. Alright? Okay? Okay, do you have any question about this goodwill punya concept? I only have one question. Because I nak tunjuk you the agility during you answer, when you answer a question. Okay? Sebab tu you tak boleh tak clear. You need to be very clear about the things that you do. Okay? You need to be very clear about the things that you do. If there are two types of opinion, you need to be familiar with the two types of opinion. You cannot have too much of confusion. Sometimes kan kita macam tak sure, nak ambil ke tak nak ambil number ni. You can only have two confusion. Kalau you kata you macam ada lima jenis answer you boleh keluarkan, that is not right anymore. Even for SBR, when you exercise judgment, normally it's limited to two opinion. You can say lah, from one perspective it is like this, in another perspective, assuming blah blah blah, it is like this. Then only you conclude. But if you give 7 perspective, that is not an opinion. That is already prediction. Okay, you teka lah ramalan. So that's why it cannot be accepted lah that way. Alright. Okay. So do you have any questions so far for me? Any question? No?
Everything's clear, sir.
Okay, everything is clear. Okay, what we covered today, a part of revenue, I think 70% of revenue, types of revenue has been covered. That is very important because normally candidates are tested more than one question from IFRS 15 because it's a big topic, right? Secondly is group accounting, but we only cover the fundamental of group accounting, which is goodwill, right? We have not covered the types of associate, subsidiary, and so on. We haven't covered. For exam, okay, if I don't see you again, let me just give you a bit of tips. Untuk exam ni, normally we see a balance between theoretical question and also measurement question, calculation question. Okay, students normally worry about the measurement part. They are worried about calculation. Macam tadi lah, you tak sure calculation mana yang betul. Okay, normally candidates are worried about calculation. Lecturers, tutors are normally focusing on calculation part because they know that the students worry that way, and also we know that you always have problem there. Okay, but the thing is, most mistakes are made in the theory part. If you have sat for mock exams and progress tests, you mesti understand benda tu. Because the theory part, when we test students, dekat situ yang you selalu skid it. Okay, kalau section C, as I said earlier in my in the live session that day, the analysis part. Okay, so if you're not repeating the paper, if you're repeating the paper but you are not seeing me again, please remember that the financial statement analysis, you need to use the right tool. Okay, kita dah bagi toolkit before. Please make sure you do the right tool, and you have to do complete question practice, 10 question at least for the financial statement. Financial statement 10, group accounting 10. You need to do complete question. Then only you can get a feel of how to do question analysis, financial statement analysis. Okay, all right. And on the easy part, such as the preparation of financial statement, please do not make any mistake. Okay, because that is where you score and push to the 50%, the first 50%. Right? Okay, so with that, thank you very much. Okay, saya memang jarang senyum, dia macam expressionless sikit kan. Tapi tak adalah, garang sebenarnya. So thank you very much. See you again. Stay safe. If you have to go out somewhere, just remember to wash your hand. Itu yang paling penting sebenarnya. Jangan pegang-pegang muka. Jangan pegang-pegang macam ni. Nak pegang, ambil tisu baru pegang. Okay? Alright, thank you very much. Bye-bye. See you. Sorry, nak ambil gambar dulu. Boleh tak nak ambil gambar sekejap? Boleh Macam mana nak ni Set bagi